Hey, ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we're going to be talking about Ripple and XRP, and we have some exciting things to talk about. We're going to be talking about the 100x incoming. We're going to be talking about the $2.7 quadrillion, and we have so much more to really kind of jump into. So let's just dive in and let's talk about a few things. So first off, in regards to the overall market, yes, we are turning a little bit red. I am expecting Bitcoin to reach down into the mid 20K region. 20.5K to 20.7K is a level that I personally am watching for to be retested. Reason why I do expect a pullback is simply because, of course, the DXY and indices opening on a Monday. Yes, we still have Sunday to get through. Who knows exactly how it's going to look, but I am taking a little bit risk off on some of my longs that I'm in. But obviously, I'm still holding, hodling my long-term holds like XRP, HBAR, etc. Those I'm not selling at all. In fact, I've just been accumulating those. I'm just talking about my longs in general that do have like a liquidation price on them. But in regards to like the 24-hour span, we have been seeing quite a bit of excitement within the market. Q&T has been making some major rounds. In the last like 1 month since the bottoming range on Q&T, we are up about 2x on that asset, which is insane. And this is not the only asset making some major gains on the 7-day span. There's quite a bit of double-digit figures out there that have been making some major moves. And even Elrond also, like eGold, up about like 3, almost 4% or so, up 11% on the 7-day span. You love to see it. But XRP has been sitting, pretty stable at around 37 cents. A lot of things have been flattening out a little bit, waiting for the next major move within this market. Again, we just kind of have to wait patiently to see the next major price action move. I'm looking to enter into some nice longs on Bitcoin at about like roughly 5 to 20.7K. And if we do lose that range, then we will most likely visit under 20K. Now, of course, what is the alternative? Well, a pump above like 24K, for an example, would put us on the map for 25 to 28K being retested, which would be pretty monumental. It will be very exciting as well. So we definitely have to watch closely in regards to like the price action, really kind of, unfolding into Sunday. Now, of course, I do want to talk to you guys about a few things. So first off, we do see this tweet from myself saying, sometimes I question if XRP was ever supposed to have exposure to the retail sector. Now, to really kind of sum this up real quick, when we talk about XRP's, main use case to the retail sector. Like, what really is the use case to the retail sector in general? Remittances are the major one that we really kind of address quite a bit. XRP freeing up capital is also another great use case potential, but really the retail individual does not really see those efficiencies. When it comes to like remittances, sending money home and stuff, yeah, that's where the huge, inception of the retail sector really is around XRP. But to me, that's not what I really wanted to address around this. To me, when we look at XRP, since the dawn of time, XRP has always been deemed the banker's token. And I do believe that it is the banker's token. In fact, Brad Garlinghouse actually explains this perfectly in an interview that we are going to be talking about in this video as well. But XRP, it's something special. Like, when we look at the delistings from the SEC, a lot of people think that those delistings, were because of the lawsuit. And they essentially were. A lot of these exchanges want to protect themselves against litigation cases and, things like that. But also when we look at like the delistings, it's also taking away XRP from the retail sector to actually buy it. And I'm not saying that we will see mass delistings, of all exchanges that are currently offering XRP globally or anything like that. I'm just saying, like, when we really kind of look at XRP, like, what would individuals do if XRP was delisted globally on all fronts? Like, that would be absolutely insane. And could that very well happen? It could very well possibly be, a possibility if XRP loses the lawsuit. But do I believe that that is going to happen? No, I don't believe so. But more so talking about XRP in general, I did say this. Now, this is more so why XRP was actually targeted by the SEC. I said this was right before XRP surged to $3 plus, achieving its all-time high. Ripple is revolutionizing the entire financial infrastructure at its core. Utilizing on-demand liquidity powered by XRP, it doesn't get any better than this. Listen to Brad Garlinghouse explain just how revolutionary this is from 2017. Now, yes, this was days, or I actually should say Now, I think that this was on December 27th. So this was, yeah, like just 6 or 7 days or so before it hit like about $3 plus. It was sitting at about $1.12 at the time of this interview on, of course, the Squawk Alley. And the funny thing about this is that quickly after this, a lot of individuals opened their eyes to XRP after it hit $3 plus, and eventually it's all-time high.
How big is that problem? How many customers do you have? There's no question there's a lot of hype in this system, and I don't actually think that's a good thing. For Ripple, we use this digital asset called XRP to settle liquidity needs between banks. So today there's $27 trillion parked at different banks around the world so they can make payments between each other. Our view is you can use a digital asset like XRP to do that in real time. Because XRP has been so efficient, it settles a transaction about 3 seconds compared to Bitcoin. So it just
passes through that currency for that period of time.
That's correct.
And there you have it. And the best part about this is the interesting thing within this is the fact that, like, when we actually look at this on a broad spectrum, like, yeah, it's solving the global payments problem of $27 trillion of money parked in nostril Vostro accounts. This is like the biggest thing. And when we look at this, it's more so for, banks, technically. It's not for the retail sector. Like, yeah, sure, the retail definitely benefits from it, utilizing it as like a payment, source. But at the end of the day, XRP was never really created or utilized properly for the retail sector, besides, of course, going after, remittances. The $27 trillion problem in nostril Vostro accounts is being fully disrupted by XRP. And I think that this overall breakdown that he says here, everything around it, is extremely just like it's like the bare minimum explanation of it. Of course, I understand exactly why he had to explain it like that. If you go in depth on this, you could talk all day about this mechanism because of how revolutionary it actually is to not only like the payment sector, but also major industries around the world in regards to like finance. And talking more so about this, like, this is not the only disruption that it actually has. We actually do see over here, this is from MacAttack XRP, and of course, shout out to XRP status for this, or XRP_Crow. And we do see, like, for the transfer system to work, $27 trillion must be parked in the international banking system to settle payments between banks. Ripple can solve this problem with XRP. Now, the reason why I bring this back up is I want to focus more so on this $2.7 quadrillion market over here. This is more so the, like, all the money aspect. And this is more so talking about like derivatives in general as well. When we talk about that market, it's a very, very large market. Massive amounts of money. It's like $610 trillion. But when we look at that and we look at the entire payment scale, yeah, it's more so $2.7 quadrillion. It's a very significant amount. Now, do I believe that XRP is going to go after this entire amount and basically achieve it? No. I could definitely see them going after the $27 trillion problem and achieving that because, of course, it's like their main goal, as well as like the $156 trillion in regards to like cross-border payments in general, because that has been their main target source. So still a very large amount of money. I mean, you're looking at almost $200 trillion right there. And of course, like derivatives in general is like a $610 trillion market that crypto is basically going after. And the funny thing is that when we look at that, we actually go over here from Anderson on Twitter. People focus on retail not having money to buy crypto. And yes, it is a big issue. But, if you are just staying focused on retail in general, you got to also look at like the, institutional area as well. We do see here, I'm not focused on retail. I'm focused on large institutions entering crypto at scale who will transact in volumes 100 times retail. BlackRock, largest asset manager in the world, is offering their institutional clients this. And yes, this is huge. We've discussed it. But the funny thing is that if we actually look behind the scenes, let's go over here, right? Now, this goes back a little bit in time. This was February 22nd, 2022. Crypto industry makes push into regulated derivatives market, a $600 trillion market. And the funny thing is that when we look down here, volumes in crypto derivatives registered almost $3 trillion last month, accounting for more than 60% of trading in cryptocurrencies, according to data provider Crypto Compare. Yes, we are seeing a major push within this area. And in fact, down here, Coinbase, one of the biggest platforms, agreed in January to buy FairX, a small Chicago futures exchange, to make the derivatives market more approachable through its easy-to-use app. The funny thing is that if we actually go over here to just recently, back in June 24th, by the way, Coinbase launched its first crypto derivatives product aimed at retail traders. hopes to capitalize on a market that is $3 trillion in volume worldwide and provide hedging options for, of course, traders. Now, you might be wondering, well, Nick, didn't you just say it's a $610 trillion market? Yes. This is just, volume in general. If we actually go over here, this is from the BIS. Up here, we do see outstanding positions of OTC derivatives declined. It just went from 610 trillion to about 600 trillion in general. But it's still a very large market. Now, when we look into this, we do see down here that their, derivatives exchange, formerly known as FairX, is launching its first crypto derivatives product this month, hoping to attract more retail traders. Now, to me personally, I don't think that they really care about retail, and I do think that this recent, partnership with BlackRock definitely explains that. And we do see like the market represents $3 trillion in volume worldwide, and we believe that additional product development and accessibility will unlock significant growth. Yeah, I think that this could easily go after the $600 trillion that is within, derivatives in general. And of course, we do see like retail participation, but we do see down here as well. However, large banks, including Nomura, Goldman Sachs, and JP Morgan, have already started trading crypto derivative contracts, giving their clients a way to trade the volatility in crypto market and protect against downside risk. Now, why am I bringing this up? BlackRock. BlackRock teams up with Coinbase in crypto market expansion. This was the huge thing. This was the huge news this month that a lot of people, looked at and, thought that this was actually bad for the crypto market. Listen, I'm going to tell you this right now. Anybody that is telling you that BlackRock partnering with Coinbase is a bad thing because of decentralization, we're going to lose the decentralization aspect, BlackRock's going to control everything, they're going to, manipulate the market. You need to stop listening to people like that. I'll tell you exactly why. These entities have been playing a part of this market for a very long time. You cannot be, you can't be on the sidelines as a, management company that has $10 trillion under your belt and not be in crypto. You see the gains. You see the volatility. These major management companies eat that up. You got to understand that institutional investors have been a part of crypto for a very long time. Not only that, but individuals wanting Bitcoin to go to 100K, 150K, 200K, 500K, etc., you are not getting that without institutional grade clients. In fact, when we look at retail, going back to Anders' tweet, yeah, this is probably one of the most realistic takes on this market in general. We should be focused on these institutional grade clients. It's not the fact that we're trying to get rich here. It's not the fact that all right, well, we need to drop the whole centralization and decentralization argument around crypto and just accept the fact that these institutions are going to come in because we want to make money. No, that is not the case at all. I will say this. Institutional grade adoption is a cycle that we need to get through in order for mass adoption of crypto to actually take place. You are not going to see mass adoption, and you're not going to see these massive gains within this market without institutional grade participation. Not only that, but institutional grade participation, guess what that also does for crypto? It streamlines regulatory stance on this entire asset class. So when we really kind of look at this, I welcome institutional grade clients. I'm not going to sit here and play this fairy tale game where I'm saying, oh my, these institutionals getting into crypto is such a bad thing. It's such a bad thing for centralization, blah, blah, blah. They're going to manipulate the market. It's just going to be the stock market all over. Listen, guess what? This market is probably one of the most manipulated markets out there. Look at the whales control most of the tokens on some of these major platforms. Look at Ethereum. Look at Bitcoin. These are two assets that if you actually look at the underlying wallets, it is all manipulated. What do you think moves this market? Do you think that this market moves by itself? This market moves by market makers. Those market makers are usually whales that do hold a major percentage of Bitcoin or Ethereum. And a lot of this is fully transparent. I mean, even if you go to Ethereum and look at the wallet data, or even if you go to Bitcoin and look at the top 10 holders, for an example, or even the top holders in general by amounts, you could tell that these are some of the most manipulated and centralized, assets in this space. And it's funny that people are still sitting here and saying that institutional grade clients are bad for crypto. It's a bad take on crypto because they're going to control this market. They're going to take, control fully and manipulate it, and you're not going to see the gains that, you've seen in the past previous bull runs. Well, guess what? You're not even seeing those gains now with just retail adoption. These gains in regards to like Bitcoin going to, X, Y, Z, all of these gains are diminished returns. Because the higher an asset has to climb, the less it moves in a bull run. We've seen this statistically. It is factual. But I'm not going to sit here and I'm not going to tell you guys that this is bad for the market. This is terrible. This is not good. A company with $10 trillion in assets under management is extremely lucrative for crypto. Because not only does it provide an insight of, confidence around this asset class, but it also solidifies just how early we are and, where we are positioned within this market and this entire financial system. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on if you guys have more free content. You guys are more than welcome to follow me on Twitter and join the Discord down in the description below. As always, I hope that you all have a beautiful day or a beautiful night wherever you guys are in this beautiful world. This has been Nick. Peace out, guys.